Love that. Breaking news. It's Nvidia's night. We are just over an hour away from the release of the AI chip leader's fourth quarter earnings numbers. Ahead of the highly anticipated report, we've got shares up 2.25% to $197 and change. The stock is off the record of 212 back in October. Now, the expectations are sky high for Nvidia. Wall Street is looking for $1.53 in profit. That would be a gain of 72% year over year, and revenue coming in at $66.21 billion. That would be a gain of 68%. Even if you do not own the stock, nearly every investor's portfolio has been lifted over the past 2 to 3 years by the artificial intelligence trade, which no doubt has been led by Nvidia, which means every portfolio could hinge on what CEO Jensen Huang says about demand from AI data center customers, the memory chip shortage, inventory of, as he put it, his insanely popular Blackwell chip, tariffs, and of course, whether Nvidia has restarted shipping its approved chips to China. Hear it straight from the man himself tomorrow, 3 p.m. Eastern on the Claman Countdown. Don't miss my one-on-one interview with Nvidia founder and CEO Jensen Huang. And yes, I will be asking him about the AI disruption fears that have throttled top software names. Year to date, Intuit down 43%. You've got ServiceNow having lost 32% since January 2nd. Salesforce down 27%, which also reports earnings after the bell. Let's take it to the Dow heat map then. We've got the blue chips in the green, up 321 points, with IBM in the lead. Big Blue has now erased much of the 13% blow that it took Monday when AI platform Anthropic unveiled a tool that modernizes a computer code that runs on IBM mainframes. IBM told us any modernization of that computer language is actually a tailwind. Doesn't hurt the mainframe business. That's what IBM says. Buyers are believing it. They are coming back in. IBM is up 4%, still down about 7.25 on the week. All right, the digital token. Let's look at Bitcoin. Buyers emerging there as well. We've got it up $4,949 or 7.75% to 69,000 after dropping below 64,000 yesterday. The crypto has suffered an extended decline since hitting a record of 126,000 last fall. Right now, we've got buyers snapping up much of the market, with the S&P up 58, the Nasdaq up 290, and the Russell gaining 17 points. We've got all of them, at least at the moment, near session highs. Let's get right to the floor show and Northwestern Mutual Wealth Management Chief Investment Officer Brent Schutte. Northwestern has $403 billion in assets under management. Brent, just since last Wednesday, the Dow has endured triple-digit point gain moves in opposite directions every 24 hours. Last Friday, up 230 points. Monday, down 821. Yesterday, gaining 370. I mean, same with the S&P and the Nasdaq. Is it kind of hard for someone like you to fall in love with any sector at the moment?
I think so, and I think your opening comments kind of highlight the risk that's out there. The economy has been relying upon AI and higher-income consumers, and the market has too. I mean, Nvidia earnings are almost bigger than any economic data point that will come out this week, just because it's such a large part of the market. I think the good news is, and kind of maybe tying into all this, because I do think you're going through a rotation, which is causing a lot of that churn, is that there is signs that the economy is going to broaden. You have fiscal policy being stimulative this quarter. You also have monetary policy where rates have come down. And that's where I think the good news is you're going to see things broaden out to where Nvidia won't be as big of an event in the future, hopefully. And you're going to see things like small caps and mid caps do much better in the future. And that's where I think getting from where we were AI reliant to getting to where we're going, I think that's causing a lot of the volatility that you're referencing in your comments.
Yeah. And we wait on Nvidia numbers coming. We expect around 4:20 p.m. Eastern time. So until then, let's just talk about what is sort of the broader picture here beyond earnings, which have certainly come in better than expected, not in a roaring way. But I'll tell you something. You look at small and mid caps year to date. The Russell has outperformed the Dow, the S&P, the Nasdaq. Is this the place that continues to be that opportunity where you see a broadening of the market?
I do think so. I reference monetary policy becoming more stimulative. So if you think about the Fed raising rates in 2022 and 2023, that caused this bifurcated or K-shaped economy that we're talking about, where the economy became heavily reliant upon AI and higher income consumers that weren't harmed by higher rates. What you've seen over the past 2 years is the Fed has cut rates. And this time, which is different from 2024, is that longer rates have actually come down too. And that's where you're seeing small caps and mid caps do better because they are certainly more tied to interest rates. And that's where you're seeing their earnings start to grow also. And that's where I'm hopeful in the future you're going to see a broadening out of the markets. And even if you think about AI, AI is moving from being primarily a benefit to those companies that were putting it in place, so the hyperscalers, the chip makers, to now hopefully the broader economy that is going to use it and broader companies that are going to use it to increase their profitability and productivity of their workers, which is something that should begin happening this year, given the reality that now it needs to actually show what it's worth, which is that profit commentary. And this is very much what happened post the internet in 2000, where the market broadened after that as the internet became used by companies to increase profitability and productivity.
But is it frustrating, Brent, for a guy like you who has 400 plus billion in assets to work with and must put to work? Is it frustrating when that AI trade is very much a double-edged sword? And from 2023 to 2026, wow, fantastic. But suddenly people have gotten a little nervous, understandably, because valuations were crazy. But now one single mention starts to tank an entire sector.
I mean, you build a process, you build a philosophy, and you stick to it. And certainly diversification is at the core of that for most of us who do this. And that's the reality that when the AI trade was kind of the primary force, it was driving just a lot of those stocks higher. And that was more frustrating than it is today when you're seeing it broaden back out, which historically the market has always broadened back out. And that's where we think there are opportunities going forward, especially if you pay attention to valuation, which is not a timing tool, but is a long-term focus tool that at least historically has determined relative winners and losers over 3 to 5 to 10-year time periods. And that's where, I guess, certainly it's frustrating, but that's where if you keep that as your process, you keep that as your philosophy, you stay to it, at least in my 31 years of doing this, it does pay off in the intermediate to longer term. And that's where we're still focused on right now.
Yep, long term, it pays off. Brent, good to see you. Thank you so much.